Hey everybody, it's Gav here with GCRE TV. Today we have the Money with Meg Show. Today we're going to be speaking about fraud in lending. So without further ado, let's just add Meg to the call and get cracking on with us today. Meg, hi, how are you doing today?
Hi Gavin, thanks for having me again.
That's okay. It's a pleasure to always have you on the show. I know you've been running around a little bit frantically today. It's the end of the year, so everybody's always running around crazy, right?
Yeah. Just nothing wanted to jive for me this morning, but it's okay. It's okay. We're here. It's good. So we're getting started. So yeah, today we're actually going to be speaking about fraud in commercial real estate lending that I've experienced, which I think is an interesting topic because I think when many people learn about a profession or go to school for a profession, you're not really taught about fraud you're going to experience in that profession. So I just thought it'd be an interesting topic for us to speak about today. So first thing, I kind of just want to start off by saying most of the fraud that you will experience in lending is really because people are trying to get 100% financing. People are always trying to get away with that down money and closing costs. And I don't know why, because it's always going to come to light at some point throughout the transaction. But people will tell you religiously, I have the down money and closing costs. I have it. They don't have it. They have no way to get a hold of it. And then I guess they try to do certain things to kind of fandangle it, make it work, and it never pans out like that. So
yeah,
there's something that we do in commercial real estate lending. It's called transactional funding, and pretty much a wholesaler, you have party A, B, and C. Your wholesaler is party B. They find a buyer. They find someone who wants to sell a property. They get a purchase and sales contract between party A and B, and then they find someone they can sell it to. So there's another purchase and sales contract between B and C. So there's two purchase and sales contracts because literally the person wholesaling the property just found a good deal. They're selling it to the end party C for more money, obviously, and they're going to be on title to the property for like 5 seconds.
Yeah.
When it goes to the title company. So I was involved in a wholesale transaction once before where you have 3 different parties, party A, B, and C. Now, you don't really know much about A. You don't know much about A because that's just the person selling the property to your wholesaler, party B, that you're representing. But again, someone trying to get 100% financing, it actually turned, what we do here is that we're really in depth. We really follow through with loan files. And, lenders even will make you interview the different parties to make sure you're dealing with legitimate people. So I have, of course, documents on party B, who's my wholesaler. I also need a mortgage pre-approval for party C, because if that person does not have a mortgage pre-approval, meaning both transactions have to close on the same exact day, same exact time, the whole entire deal is off. The only way you get 100% financing in transactional funding, wholesale funding, is because the lender is going to fund 100% of the purchase and sales price from A to B, because they're selling it for more from B to C. It's closing the same exact day, the same exact time. That's the only way that exists. People try to fandangle this transactional funding into a real transaction, and that's what happened to me. So pretty much I was dealing with party B, who was the wholesaler. I was getting their documents in. Party C, I needed a mortgage pre-approval for them, or I need a bank statement under them showing that they have either the cash to buy the property cash, or they have a mortgage pre-approval. To make long story short, I interviewed party B several times. Obviously, that was our client. I even spoke to party C, who was the end buyer, because I wanted to just ask a couple of questions about their mortgage pre-approval. Well, party B and C ended up being the same person. So yeah, and it was weird and I talked to so many people on the phone during the day that sometimes voices start sounding the same, even though they're different. So I started eventually catching on that, hey, your voice sounds very similar to the person I was just speaking of. So this person, party B, was really trying to buy a property from someone for 100% and wholesale it to himself, which he created another entity for party C. To get 100% financing, basically, which is kind of clever, but to actually pull that off is almost impossible. I mean, they have to have, you're getting documents from different email addresses, you're interviewing these people, you're talking to them, and that's actually how I caught on to it. You need identification for these people. So he had to actually set up, obviously 2 different email accounts, have 2 different two totally different sets of documents that would actually make sense for that transaction.
Right.
So that's a lot to go through. Like it's a lot to go through, just do it the right way. So you got to be careful about that. I've also experienced on any type of purchase transaction, most commercial lenders will ask for at least 2 months of bank statements, a lot of times 3 months of bank statements, because they want to season. It's called seasoning your down money. They want to know where the down money from your transaction is coming from. Make sure, of course, from legitimate sources. If you have bank statements and there's large deposits in there, they will ask you for proof of where that money came from.
Yeah, money laundering checks.
Yeah, just make sure, hey, if you have 50 grand that just showed up in your account somehow, where did that come from? Did you sell a property or something? And then they'll make you provide the sale HUD, the sale closing statement to prove, yeah, this is where that money came from. So I have seen so many bank statements throughout my 10 years in doing this. I personally do online banking myself with several different banks. I have had a lot of people actually submit me fake bank statements, and they looked so legitimate. Some of them looked so legitimate that I don't know how the lender found out that they were not real bank statements, but I've had several people literally copy, PNC's logo and everything, and maybe I'm not sure what program they're using to create the bank statement in, but you have to be very careful when you're looking at bank statements as a mortgage broker. Obviously there's a daily, on this day they did this transaction, this day they did this transaction, this day they did this transaction. Sometimes you actually have to go to the bank statements and add and minus all those dollars to see if the very bottom number, the very ending balance, you wouldn't think to do that because, first of all, that's very time consuming. If someone uses their debit card religiously, and they make 100 transactions in a month, which is very easy to do if you use your debit card religiously, you're sitting there for a while doing that. But I actually had people submit bank statements, and the way the lender caught them was one of the underwriters there went through all the numbers, the additions and subtractions. It was a little bit off on the bottom number. And obviously that wouldn't happen at a bank. That would be the exact number. But the bank statements looked extremely, you just download your bank statements from online banking. They look very, very, very good. I've also had bank statements submitted to me that are obviously fake. They're like on a Word document, and it's like a copy and paste thing, and I'm like, no, this is not going to work. But I need a real bank statement. Download it from your bank. You can fax, mail it in, whatever works for you. But I need a real bank statement.
Yeah.
So that's another thing people will try to do in this business. Being fraudulent and trying to, for some reason, overdo it and say they have the money to complete this purchase transaction when they don't.
Yeah.
I have had in the past, this has not happened to me much, but beware of this if you're in this business. If you're doing a loan for a client and for some reason they will not get on the phone with you, that should be a red flag.
That's a huge red flag.
A woman I was doing a loan for in the past, she was extremely responsive via email. If I emailed her literally 5 seconds later, she would email back. But she never, ever wanted to talk to me on the phone. She did not haggle her. She didn't try to haggle with her loan rates and terms. She didn't really haggle with anything. It was too easy, basically, was the point. So at some point, I started suspicious, and I said, why don't we do a phone call? I know we're emailing, but I just would like to explain some things on the phone to you, introduce myself. She didn't want to do a phone call. She had every excuse in the book to not do a phone call. And eventually to the point where it started getting odd. And we have a great reputation with our lenders. Of course, we don't make any money here as mortgage brokers until the loan closes. But the last thing I want to do is send one of our lenders a fraudulent borrower. And the problem is people, when you're in the money business, people will prey on you. You don't know that they're fraudulent. You're just doing your job and going through the motions as you do with the 100 other clients you had. So you just don't know. So the point is, this woman would never get on the phone with me. So I finally told the lender, I said, it's very odd. There's no haggling. There's no, I have to call and explain documents. It's becoming too easy. I think we should set up a phone conversation with her before you guys decide to close this loan. And the lender, that was not their policy. Some lenders do a policy, just so you know, like that, Gavin, where they will actually do what they call a kickoff call with you before they start ordering third-party reports and they start really getting into it with you. They want to talk to you on the phone. I think that's really smart because you get a feeling for who people are, what kind of business person it is when you speak to them on the phone. She never wanted to get on the phone. Finally, we go to get her on the phone and get her on a phone conference. and it wasn't a female voice, it was a male voice, and he had some type of excuse as to why she couldn't be on the call. So pretty much what happened was somehow this gentleman got a hold of this woman's information, all of her information, her IDs, her identification, her entity documents, personal financial statements, social security numbers, and he tried to apply for a loan under her. And he did a very good job. We were going through the loan process. The reason he didn't want to get on the phone with me was because he doesn't sound like a woman. You know, he's applying under a woman. Mm-hmm. So you have to be very careful. If people are resisting to get on the phone with you, that is a sign of fraud. Your borrowers, real legitimate borrowers, always want to be speaking to their mortgage brokers or their lenders. They're going to have a million questions going through the loan process. They're going to need your help. They're going to need help answering them. But if someone is resistant to getting on the phone with you, that is a red flag. Something's going on there.
That doesn't surprise me. As an ex-former cop, I've seen a lot of this. So. Oh,
okay. Well, see, I'm not from that type of background, but yeah, going through some of these things. Well, mortgage fraud, you probably may know. I mean, mortgage fraud is a serious crime. You can end up in jail over mortgage fraud. Even not having proper licensing and stuff in this business, you can end up in a lot of trouble. But
yeah,
lying on a loan application is mortgage fraud. You know, I'm pretty sure that comes with some type of jail time. I'm sure it's hard to prove because on a lot of loan applications, the borrower has to sign at the bottom saying, you know, to the best of my knowledge, I've answered these questions correctly. Yeah. So they could say, well, it was to the best of my knowledge at that time. But if you're filling out a loan application on behalf of someone else and forging their signature and pretending to be them, now you're taking it too far.
Yeah, that's a different case.
Yeah, so that's just been some odd things that have happened to me, and I have a couple more too. A lot of times in this business, in commercial real estate lending, we actually do loans on 1 to 4 unit investment properties. So I can do a loan on a single family residence, which I know is confusing to people. People are always confused about this. So we do commercial loans here, but if it's an investment single family residence and you have it rented out with a tenant, and you can prove you don't live there, and I have a copy of your ID, you live somewhere else, and I have a copy of your utility bill, and you live somewhere else, and I have a lease showing that it's rented out, we can do an investment property loan on that. You're closing in some type of corporate entity. Now, in commercial lending, you have certain lenders that are called stated lenders, meaning they don't need your tax returns or anything to close your loan. They're not doing a global debt to income ratio on you. The loan is purely just based off the income and expenses on the property. They do want the borrower to have a credit, decent credit, 650 and higher. But, you know, besides having good credit, as long as the property appraises and it's good and its tenant is rented out, there are certain loans in commercial real estate lending where there is no global DTI or even sometimes not even a debt to income ratio on the property. Sometimes what happens in this business is borrowers get wind of that. They get wind that, oh, well, they don't need my tax returns to close this loan. And in most residential loans involve tax returns, meaning you have to personally be making enough money to afford this loan. That's how most residential loans are. So what happens sometimes is people kind of find this loophole in commercial, and they actually do live in the property. They do live in the property, but they try to fake like they don't. They'll change the address on an ID. They'll get a lease in place. Where they always mess up is they'll get a lease in place on the property to show it's an investment, but really they live there. But it's with someone they're related to or with someone they know.
Yes, that's a famous one.
So and then you're going to the documents, and actually this just happened to me yesterday. This has happened to me several times in the past. But just yesterday I was going through someone's documents, and I realized the tenant inside the property was the client's mother.
Oh,
so it's first of all, like it could be legitimate. You could be renting out a property to one of your family members. You could be doing that, but the way they're all entwined and the way they all have now, they all have the same address. The husband, wife, and mother now all have the same address on their driver's licenses. So you all live over here, and then there's just this, she just lives over here. It's just the entity documents were weird the way it was registered. But the point is, a lot of times people will try to get a commercial loan on a property that they live in, which is a big no-no. You can't do that. A commercial loan is purely for investment properties that you do not live in at all. Never. Not even an Airbnb thing where you're going to stay there one night. You cannot stay there. So a lot of times people will try to switch up their documents, change your operating agreement, who's part of the company, who's not, do things so that they can try to get a commercial loan on a residential property they live in because they're not qualifying for a residential mortgage because maybe they don't have the income on their tax returns to qualify for that residential mortgage. So you just have to follow the paper trail, really pay attention to things. Sometimes the paper trails, sometimes people are very, very good at hiding those things. But again, an appraisal is going to happen to every single property. So I have had clients in the past where their paperwork was great. They did a very good job at hiding that. And this is actually very common. This happens to me a lot in commercial real estate lending. But again, the appraiser is going to come to the property to appraise the property, and they're going to do an interior and an exterior inspection.
Yes.
So here's the thing. If you really live there, it's kind of hard to fake that you don't when an appraiser walks through your property. So I had a borrower once rehabbing a property. Beautiful, beautiful house, way over improved it. His exit strategy apparently was to sell. And the appraiser, we had two appraisers go to his property because the first appraiser that came out noticed he was there cutting the grass. His dogs were there. The dogs were in and out of the house. He was doing laundry. The house looked lived in. There was food cooking on the stove. So he was just like, well, now the appraiser, of course, is not going to say anything to the client, but on the appraisal report, there's a notes section. There's a lot of sections where appraisers can write notes. They will put, I believe this client lives here. And he took pictures of the food. He took pictures of the laundry. He took pictures in the cabinets. There was food in the cabinets. There was some clothes. So he was like, the appraiser said, if this is a pure investment property and it's really an investment property, why is it lived in? It wouldn't be lived in, So the borrower had this excuse, well, I was just there a couple of nights because I'm rehabbing the property. I was just fixing some things up. I didn't want to make the trip back to my regular house. So I bought it. I was like, that kind of makes sense. If it's a good distance, it makes sense. But then we had another appraiser come out, and that appraiser said the same exact thing. So at that point, the lender was like, no, this is not an investment property. You're over. And the fact that the property was over improved, way over improved, the lender wasn't buying it. And once they started, then see, when you start doing that, lenders now start asking for more things, more proof of documentation. Well, okay, now I want a copy of your bank statements from this and this and this account. I want to see what address is on your bank statements. Where are you getting your mail? Well, all of a sudden, he couldn't produce any mail from the different address. That supposedly he lives somewhere else. Remember, he doesn't live where he was rehabbing, he lives somewhere else. So then your mail should be sent to where you live. So give me a copy of your utility bill from the place that you really live at. He couldn't produce that. It's always radio silence. Whenever you catch someone trying to commit some type of mortgage fraud or do something like this, and once you start asking for things that you need to prove your case, then they just ghost you and they're gone.
So I got a question for you. When you catch somebody committing mortgage fraud, do you guys have a legal obligation to hand it over to the police?
That is a great question. And you know what, Gavin, I've thought about that a lot. I don't think we do, to be honest with you. But I think, what I always do, just so you know, I always notify the lender right away. And a lot of times the lender is the one that catches it. As I'm going through things, sometimes I will catch it. But again, there's 2, 3, 4 people behind me also reviewing the same documents. So a lot of times they'll come back to me and say, hey, Megan, this doesn't make sense. Or you're seeing where the property is registered. Look at the address on the driver's license. It's just this are not adding up compared to the lease. This is seeming a little odd. I don't think the lenders notify the police, just so you know. They're always told, and obviously that's why the file is declined. It's declined in our system for that reason, and it's declined in their system for that reason. But to be honest with you, Gavin, this happens so often. I mean, are the police really going to hunt people down because they try? Here's the thing: they didn't get the loan. It was caught. So, what are the police really going to come to someone's door for something like that? I mean, I don't know. I don't think the lenders do tell the police. I guess it would just depend on the severity of it. But I can tell you in commercial real estate lending in the United States, the underwriters who have paid the big bucks, they are paid the big bucks not to approve loans, but to kill them, to make sure that they'll do anything they can to make sure loans don't get approved. And that's kind of an odd thing because in this business, nobody makes money until a loan closes because you're not getting your origination. But I'm telling you, the underwriters are tough. They will find a lot of things. They'll find anything wrong with the file. They're very diligent at going through paperwork. And sometimes you will have clients, and I have had this as well, who are not trying to commit mortgage fraud, but the lender is convinced they are. For whatever reason, they found something in the paperwork, or I have had appraisers go out to properties, and my borrower is letting them into the property because it's their investment property. I had an appraiser once put on an appraisal report that my borrower told the appraiser that he lived there. It was a 2-unit. It was one of his rental properties. He let the appraiser into the property because he lived close by. And the appraisers put on the report that the borrower told him he lived there. And he didn't. And I personally know this gentleman. And then he put that on the report. So the lender's coming at me like, he lives here. We can't do this. That's a residential loan. We're not licensed to do residential loans. And I had the borrower call the appraiser, and the appraiser actually admitted to him, hey, man, I'm sorry. I did like 6 appraisals that day, and I just confused yours. I confused yours with the residential appraisal. And the appraiser actually did end up fixing that comment. But, there's a lot of human error that goes into things like this. Yeah. And that can really mess up someone's file if you you write the wrong thing on an appraisal report.
So I presume this happens a lot in single-family investments, not in the big major commercial world where there's like industrial buildings or multifamily and stuff like that.
Yeah. So so we deal with 1 to 4 unit investment properties, and then we deal with all different types of commercial properties. That owner-occupied residential thing really only comes to play on the 1 to 4 unit residential properties because in the way it works in the United States when it comes to lending, if it's a single family residence, a 2-unit, 3-unit, 4-unit condo or townhome, so that I just abbreviate it and call them 1 to 4 units. If the borrower lives in one of those units, say it's a 4-unit and they live in 1 unit and they rent the other 3 out, they have to apply for a residential mortgage. They cannot apply for a commercial loan. If they live in any of the units, it's just the laws here. It's the way it works when it comes to lending. But sometimes what will happen is that client, for whatever reason, does not qualify for a residential mortgage. Maybe they're retired and they don't have any income anymore. They don't have, most residential lenders want to see W-2 income. They want to see that you have a job, and you can, of course, afford the bills. So sometimes just what happens is they don't qualify for a residential mortgage for whatever reason, and they're trying to figure out how to get a mortgage on the property, maybe how to refinance cash out if they already own it, or how to purchase it. So they will try to come into the commercial space, because in the commercial space, there's a couple different loan programs where, again, it has nothing to do with your tax returns. It's just pretty much the debt to income ratio on the property. So they'll try to fandangle their documents and act like someone else lives there. But I'm telling you, if you really live somewhere, that's really hard to do. It's really hard to do. You have to really spend time making sure that you did that right, because you're going to get caught. People are going to figure it out. But if it's a pure commercial property, if it's a self-storage facility or, a retail strip center or something, that never comes into play, because those are not properties where someone's going to live in residentially.
Of course, yeah.
You're not gonna live there. And in commercial, though, if the property is purely zoned commercial, a lot of times those properties are owner occupied. For example, a barber shop, nail salon, doctor's office, the borrower's business is ran out of that property. I doubt they sleep there, but maybe if they're a workaholic, they do some nights. But that's actually okay. There's no residential component usually to commercial properties. So that doesn't ever come into play when you're dealing with a pure commercial property. It's just the 1 to 4 unit investment properties, because there's this very fine line between residential lending on 1 to 4 units and commercial lending. And it's a very fine line. Okay, so I got a couple more and we can wrap this up. We did briefly talk about loan applications, people lying on loan applications. it is mortgage fraud. It is very common. It happens to us every single day. On our loan applications, we are and everyone will know if they go to Gavin's link. Our loan applications are very detailed, and they ask very specific questions because we ran into these problems throughout the process. So there is a question on the loan applications that will ask pretty much if you have any type of credit issues or anything going on right now that we need to know about. It says, are you a party to a lawsuit, or have you previously been in a lawsuit? Are you currently in a lawsuit? It literally lists anything that could have ever happened to you in terms of credit or judgments or liens or anything like that. We need to know about that because the lender is going to have the title company pull a judgment search on you, on the actual person personally guaranteeing the loan, everyone that's a part of the entity. If anyone has anything on them, it's going to be found out. Lender's going to run credit checks, background checks, have title company run their checks. So they're making sure that this person personally guaranteeing the loan is legitimate. That's who they are. So we asked that question, like I said, on our loan applications. And part of that question is, are you a party to a lawsuit? Are you currently in a lawsuit? Have you previously been in a lawsuit? So I had a client, very big mixed use property, very, very large property. And she answered no to that question on the loan application. I'm going through the deal with her, Her mixed use property was actually so large. The appraisal was $5,000. And she, the borrower was always paying for that appraisal up front. So she paid $5,000 for the appraisal. Appraiser's going through the property, notating certain things. There's certain, property looks great, but certain things here, certain things here. And we're going through the deal. This deal, because this property is so large, and just due to the lender wanted so many documents, it was insane. So I'm processing so much stuff. I'm dealing with the title company. She also had a closing attorney. I was dealing with them too. Everything was going good. It's a larger commercial deal. I'm dealing with all these third parties. Title company sends over the title commitment. I usually go through it just because there's a section in a title commitment that will actually list any type of judgments or liens against the property. So if someone that's another question that we ask on our loan applications, is there any judgments or liens or anything against the property? We need to know that to make sure the LTVs are working out, to make sure the new loan you're getting is going to cover those things and pay those things off. If the new loan you're getting is not going to pay those things off, then borrower needs to be made aware that they're going to come to the closing table with cash. And we need bank statements, legitimate ones, proving they have that cash to come to closing. So anyways, title company sent her a title commitment. I went through the section with liens, no judgments against her, nothing. I'm like, great, this person's legitimate. We got a big loan here. This is going to be a great closing. Lender asked me to produce some other documents. They wanted some information about when the property was built and stuff like that. And I was like, I thought that was kind of odd because I was like, well, won't the appraiser notate that on the appraisal report? Won't they, look into maybe the public records? And appraisals are very, very detailed, especially commercial appraisals. They're hundreds of pages. So anyways, I'm Googling the property and finding out, just trying to get some basic research about it. I find this article that pops up about the property, and that the owner of the property is in some type of legal battle with the city, and the property is being condemned, and I'm like, I'm like, what? This is the property I'm doing a loan on. So in the article, it actually had, I guess, an attorney's office that worked for the city that you could call, if you wanted more information or something. So I called that attorney's office in the article, and I said to the woman that answered the phone, I just said, hey, I'm doing a loan on this property. We're literally ready to close. Like, we're right here. Lender wanted me to do some research, and I'm seeing all that you're condemning this building, and what is going on? And she knew exactly what I was talking about. She said, hold on a second. She put me right on the phone with the head attorney in the office, and he explained everything to me. Apparently she doesn't even have a certificate of occupancy to rent. Now, this was a large mixed-use property, and there was about 30 tenants, and then retail on the bottom. She didn't even have a license to rent out these units, these residential tenants, and she refused to get one and kept fighting the city. And they were like, they're hanging like condemned signs on her property. I guess she keeps taking them off. I guess the appraiser just went out there the exact day that she took those signs off or something, because usually the appraiser would, take a picture or something like that and put it on the report. But they had liens and judgments against her. She's actively in a lawsuit with the city. Like the gentleman explained everything to me, how bad she's into it. But the weird thing was none of that came up on the appraisal report. Nothing came up on her background check, because when you're in some type of lawsuit or something, it comes up. And nothing came up on the title report either. There were no liens, no judgments against her, and the city had a lawsuit against her. So there was a pending judgment against her. So 3 different systems that usually pick this up faltered, and she said on the loan application she was not a party to a lawsuit. She did lie on the loan application. The way it was found was really silly. I was just doing some research on the property and happened to find a news article and so and what really stinks about that, I worked so long on this deal and so hard, and we were going to earn a great fee. And I just want to, my job here is to bring in money from closed loans. That's what I do here. But I had to kill my own deal. I had to call, the lender didn't catch it, and none of the third parties caught it. So I had to call the lender and explain to them, you guys can't close this loan. I had to kill my own deal, which really stinks after working on it for so long. But that's just another, scenario of just certain fraud you will experience in lending. If people are parties to lawsuits, they do have to make it known to you. And usually if someone is in the middle of a lawsuit, there's really nothing you can do for them in terms of lending. They have to get that settled first. All right. So another thing, just you just have to be very careful. We kind of already went over this earlier, but sometimes you'll be doing a loan for someone. The example we went over earlier was I was doing a loan for a woman, but it was really a guy applying for her, with her credentials. Somehow he got a hold of her credentials. I've actually had borrowers, though, themselves going through the loan process, applying for a loan themselves on behalf of their company. But there's someone behind the scenes telling them what to do and telling them, this is the process you're going to go through, and I need you to create this. So all the documents they are giving me actually are legitimate. They are their entity documents. They are their IDs. But there's someone behind them in their ear telling them what to do and telling them they're going to get cash out on this and they're going to split it and to put it in this account. So long story short, I had a client a couple years ago that owned an investment property. I don't know how he got into it with this other person behind him, but he wanted to get some cash out on the investment property. Apparently he was 100% owner of this. I'm sorry, he did have a partner, but the gentleman I was dealing with was the majority owner. So when you have a couple of people that make up an entity, you always want to be dealing with whoever is the majority owner. Sometimes that can be difficult because everyone might be 33.33% owners, So then at that point, you're just going to have to figure out, who's really the person in charge of this mortgage. But I had a gentleman that did have a partner. The partner was a minority owner. I never spoke to the partner. I only spoke to him, who was the majority owner. He wanted to get some cash out on this investment property that they both owned. He went through the whole entire loan process. He was giving me legitimate documents. They were his entity documents. They were everything. And then, when closing happened, somehow the other minority partner told the title company to wire the cash out because the lender delivers the funds to the title company. Title company then distributes the funds to all parties, meaning the borrower, any realtor, anyone that's earning a fee, brokers, realtors, whoever, lawyers involved in the transaction. The title company disperses all that to all of them. So anyways, the minority partner in this transaction convinced his majority partner to get cash out on this property. And pretty much what happened was the minority partner had I don't even know how this happened because the only person who had to sign for this mortgage was the majority owner. Yes. That happened. There's one person sometimes that will sign on behalf of for a mortgage on behalf of an entity that other people are a part of. So you have to be very careful if you have bad partners, and this is what happened. Someone in your company taking out a loan on behalf of this company and you not agreeing to it, that happens a lot. And I don't know if I would say that's fraud in lending. It is on behalf of all the partners who are not aware. But that's really what happened here. And the minority partner pretty much set up a whole entire different bank account that his partner did not know about. And he had the title company wire the cash out funds to that account, and then he took off. And then he ran. Yeah. And then they had some type of falling out dispute, and the majority owner was promised a certain amount of the cash out. The minority partner, of course, took off with the money, had it wired into some account that he doesn't know about. So he called me a couple days after closing, asking me like where his funds were. And I was like, where do you mean where your funds were? You closed a couple of days ago and you went to your title company. Didn't you tell the title company where you wanted your money wired to, or didn't you have them cut you a check? Or he was like, no, the money was gone. I'm like, I don't understand. You're the one that signed for the mortgage. You're the one that physically brought yourself there. You signed. Why are you not the one telling the title company where to wire my money to? He's like, well, my partner said he was gonna handle that. Why would you're the one signing on behalf of this mortgage? Why would you let someone else tell the title company where to wire your money that you're now on the hook for? You signed the mortgage. So you just gotta be very careful of that too. Partnerships go bad in this business. Things like that happen a lot. So, be careful who you get into bed with in business. And wire fraud is also another huge thing in this business too. And I'm very surprised that it happened, because title companies are very, very they're very, very cautious on who they wire funds to these days. They will not just wire funds to someone. You physically have to call their office, verify your wiring instructions that you've given them. Sometimes they make you fill out an extra form, even like you give them your wiring instructions, which is basically your bank, your checking, your routing. Then they'll have you fill out another form. Then they'll have you fax it. Then they'll have you secure upload it. It's like all these different steps. So I'm very surprised that happened, because I don't know if that would be considered wire fraud, but that title company should have 100% verified with the client who they're closing the loan for, where do these funds need to go. They should not have trusted anyone else a part of that entity. This person signing on behalf of the mortgage, this person tells you where the funds are supposed to go. Yeah. So, to wrap it up, those are just some crazy things I've experienced in commercial real estate lending, mortgage fraud, people trying to get 100% financing, trying to fake they have the money. I don't know why people do this and waste their time, but they do it all the time. The point is, it's always caught. And it wastes a lot of people's time, unfortunately. Not only their time, but a lot of other people's time just trying to be in this business and make a living. Yeah. No, as a former cop, I always say to people, you could run, but you can't hide. Somewhere we'll find you. Yeah. Yeah. Interesting question though about reporting mortgage fraud. I know if you go on the IRS's website here for the United States, there is a number on there where you can call to report mortgage fraud. But to be honest with you, Gavin, it happens so much. I really don't think lenders report it. Yeah. They just deny the loan, and then they flag you. Just so you know, they flag you, your entity name, anyone a part of the entity. And it stinks. Just like that partnership example about how that partner did the other one wrong. Mm-hmm. Being a cop, you get a sense for when you're dealing with people to know sometimes if they're legitimate or not. You can just tell by the way they're going about things. Mm-hmm. But I have had, unfortunately, certain partners and companies do illegitimate things and try to do that. The other partners didn't do anything wrong, but because certain lenders caught wind of what the first person was doing, now they flagged the entity and they flagged everyone in the company fraud. I've had to try, maybe their partner, it's a small lending world. So I dealt with the one trying to commit fraud, didn't realize that this other one was a part of an entity prior with them. And I've had other borrowers try to apply for loans with lenders. The lender will not do the loan for them. It was 10 years ago, and a partner in their company did something illegitimate. And it's like, well, that was the partner. It wasn't them. But if you do something like that, you're flagged. And like most businesses, it's honestly a small business here. We have 50 states, but it's a small business, and lenders talk to each other. Mm-hmm. I don't know if they have some type of secret database they all can get into, or if this person was fraudulent, they all know. But I have gone to certain lenders with clients that have not done something, but again, maybe their partner did somehow 10 years ago that they're not even partners anymore. But there's definitely some type of list where if you get put on it, no one's going to lend you anymore. Yeah, definitely.
Okay, cool. Well, Meg, that was a really good show today. You know, lots of examples to share with people what not to do if you're a borrower, but also if you're a lender and also a mortgage broker. As always, it's a pleasure to have you on the show. For anybody who wants to get hold of Meg, the contact details is just below here. 11capitalfinance.com/GCRE. Meg, I know this is the last show that we have until next year, because we're going to be closing off. I hope you have a really lovely time, you and Christopher, for the holidays with the kids and stuff. And I look forward to carrying on the show with you next year.
Okay. Well, thank you, Gavin. Again, thank you for having me on. All these episodes, it's been really fun. It's been fun sharing the things I've learned about this business. And I hope you and your family have a great holiday as well.
Okay. You take care. Thank you for your time. Ciao.
Thank you.
Bye.